Hello, 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 everyone. Good morning. Happy 2026, second day in. How are we all doing this morning? Good morning, Odie Green, another rugged individual. Oh boy, New York. Oh boy. You know, the warmth of collectivism versus the frigidity of rugged individualism. I think it's backwards. I think collectivism has been tried and it ends in cold and death. So, good morning, Patrick. Speaking of cold, are you up in Minnesota this morning? I don't know if you're traveling for the holidays. Good morning, Yogi. Happy 2026. Good morning, Royal Palms. Good morning, Sterling. Wrapping up your busiest week at the dealership. Hope all's well. Happy New Year to you, Mark. And to you also, David. Happy New Year. Good morning, Boaji. I'll be back to your normal, incessant chat bombing next week. Well, we look forward to it, Sterling. We look forward to it. Good morning, Tony. There's just, I mean, oh boy. Oh boy. We had the new mayor sworn into New York City yesterday. Wow. Wow. My sister and her husband live in New York City. They just turned around and bought like close to 70 acres in Connecticut. And they're leaving this summer. They are out. They bailed. They're like, we're done. And my sister loves New York City. Lots balmy 5 degrees here in Minnesota. Lots of snow cover. Better you than me. Oh, it was chilly here yesterday. It was only like 66 degrees. It was chilly. We got rain on New Year's Eve. Didn't prevent people from lighting off fireworks until 3 a.m. Drove the dogs absolutely nuts. So, how is everyone doing this fine new year though? Another year to kick off. Uh so today S&P global manufacturing is the only real number out today. That's it. You got the Fed balance sheet number at the end of the month, but that's about it. And then next week, we'll look at this on Monday, but next week we get lots of data out, including non-farm payrolls next Friday. So next week's going to be busy. So enjoy today. S&P, it's buy the mega caps and AI and chips. Oh, really bad itch. Hey Ted, how are you? Happy New Year to you too. So that's where we sit. Buy it all of the AI chips and mega caps today, and some financials. Don't buy progressive. Don't buy your progressive though. Groups. Let's just do a quick refresh. Everything. Oh, consumer defensive. You know what? I think this is going to be a year where we get some more rotation in the consumer defensive. I'm really keeping an eye out for that one. I got a huge list of stocks I've been working on. So I'm going to be looking at consumer defensive. But besides that, uh, everything up being led by technology. Fed watch still is 85% for the pause in January, which is 26 days away. At the end of the month, fear and greed, we drop back to fear with the end of the year sell off, especially we could not hold. Remember, I said I'd be surprised if that 4 hour percent beat buy didn't hold, and it didn't hold. It didn't hold on Wednesday. And I was surprised, but it didn't hold. So you can't hold it. Can't hold it. Remember, if you're learning the percent beat buy stuff, if it does not officially trigger, do not hope. Just take the small loss in the trade. Many times you can get real close to a scratch on it and just walk away and wait for the next setup. 40.23 on the dirt cheap K Schiller. By the way, again, there's nothing today, but Monday there's no earnings to kick off. We got a little on Tuesday. I'll go put up a new earnings one next week, but there's nothing. You don't even have to worry about Monday either. Happy New Year, holy holy, with the abbreviation. So again, if we look at this, here was where was it? This was right here. See these two bars? This was the percent beat buy. We broke above it. We got all the way up to 69.50. What was the high? 69.51, and then dropped back down immediately. We're still getting selling pressure coming in, especially around the 10 a.m. Eastern time. So I am really focused on about 9:45 to 10:15 Eastern to watch how price action reacts. Now, so this is what I'm talking about. We did not trigger officially, so it was not able to be held. Then we had the sell off. Then we had the big sell off at the end of the day and end of the year. Now, last night, that's why I said if we did drop down, I would be watching the futures open, which we opened right here and then took out the opening range and then went off to the races uh, into the European session, then went off to the races again. We flattened out prior to the European session opening, then took off again. Now we've pulled back. I'm watching this bottom of the 1 hour rotation zone. I'm specifically looking uh, if we start breaking back above about 69.32, just going into the open, but I'm going to be keeping an eye out for selling pressure specifically. Now, if we do get that selling pressure into that 10 a.m. Eastern time frame, I'm keeping an eye at 69.15 area, and then will not stay in bullish mode if we close below 69.0825. Good morning, Kevin. So that's if we do pull back with the selling pressure that's been happening into the open. I want to see if there's a shift today, actually. But if we do, that's the key area I'm looking at. If we do not and we break out above this 69.35 area, then I'm looking to go with the move higher if we don't get that pullback. And if we did manage to rally strongly today and close above Wednesday's high, it is an official percent B buy. We're not there yet. It's closer than NASDAQ. But that's what I'll be watching. And it would also be a rotation zone buy because we pulled back in the rotation zone, pretty much held a decent support area, and then rotating back up. If we get selling pressure though again today and we drop below that 69.08 area, and especially if we got major selling pressure and drop below the rotation zone, there's still a gap left behind. So I'll be looking at 68.87. But let's see. I mean, we've had the Santa rally. Let's see if it can eke out a small gain or not. After Christmas, we've had 3 days of pullbacks. In terms of the NASDAQ already got broke above Wednesday's high, but has not been able to sustain it yet. So I'm paying attention to Wednesday's high for a percent B buy. Going into the open, same thing. I'm watching if we get that selling pressure going into the 10 a.m. time frame. Key levels for me are on the pullback. I'll be paying a closer attention on this at 25,625. But if we drop below that, the 50% retracement is 25,586, and the major line in the sand is 25,546.75. Because if we close below that, not good for any continued bounce in the NASDAQ. If we do turn around and the key areas from the highs on Wednesday, 25,716. So that's going to be a little key minor level. But then it's got to get above this 25,742 area. And if it breaks out strongly, 25,770 is resistance. Above there, you're into a clear path move on the 4-hour time frame. So that's what I'm looking at there. There's no gap left unfilled to the downside. So if we did reverse and took out Wednesday's low, I'd be looking closer to 25,325. The Dow also, now in the bigger picture, the Dow's got cycle bottoms. So starting next week, if the Dow does not stage a major move today, the first one I'm looking at are the S&P and NASDAQ today. But the Dow, back to the bottom of the rotation zone. If it does not rally today, I'll be looking Monday for a potential percent B buy bar. Key resistance in the Dow is 48,650 area. Russell did trigger the double. Very interesting with that. So I'm going to see if that does follow through. We got cycles at the bottom, so would I be short here? Not yet. Going to be watching for the bounce play on the Russell, and there's a 50 EMA coming in right about this 2490 area. We start breaking below that, it could be a nice little, at least intraday short. But other than that, the Russell continue to not find much strength in here. If it does rally, it would trigger a percent beat buy on a close above Wednesday's high. So we do have a potential percent beat buy, so I'm paying attention to Wednesday's high if we rally. VIX, still, it's a little elevated from the prior lows, but there's still, even with this 3-day, 4-day pullback, there's nothing. There's no fear in this market whatsoever. The DAX, which we haven't covered in a little bit, but continues to grind higher, approaching the all-time highs. This is a futures. I think the cash did make a new high. The futures, not yet. Key support 24,480. Yields still caught in consolidation. A little pop up today, but still caught in consolidation on the 10-year. We still have, again, it's triggered, and nothing's happened to invalidate the massive inverse head and shoulders. 30-year also, little pop up. 30-year actually today, it's reversed, but it hit officially the first target of the inverse head and shoulders. You'll see here on the weekly, there was your inverse head and shoulders. There's the first target officially hit. So stop is now officially raised on that. The stop would be on a close now back below 4.657 would invalidate the rest of the pattern. It's not where I'd have a personal stop, but that's the invalidation point if you're trading the yields on the 30-year. What else do we have going on? Again, Happy New Year, everyone. Yeah, thank you for tuning in. Crude moving back down. 57 is very key support. We're trading just below that right now, so I'm going to be watching where this closes. But if we take out that 57 and then take out the low from December 26th, I'm going to watch for the retracement back down. 55.95 area, then 55.50 are the two key prices I'll be looking at lower. Gold. Keep an eye on this. So, little sell-off, could not sustain anything on Wednesday, closing just below the rotation zone. But today, I'm watching Wednesday's high. Wednesday's high for a percent B buy. So that's what I'm keeping an eye on there. If we were to take out Wednesday's low, I'm looking for a return to the 50 EMA area in about 42.17. Down to the 50 EMA, which we haven't reconnected to since August. So, silver, lots of volatility back and forth. On a closing basis now, silver's got to get close back about 77.64. 77.64 is the magic number, at least to tip the probabilities for a retest of the Monday's high area where we had the manic. But so far on the bigger picture, we're not even reconnected with the weekly rotation zone, and this would be a volatile but a sideways correction. A sideways correction. What else? Copper. Not much to talk about there. Just another volatile. Metals are very volatile because you got the gamblers moving in. Platinum. This is a pullback correction. The key thing on platinum, it's pulled back 50% from the last little run up. If it rallies today, watch Wednesday's high. Dollar index continues. Again, we're testing the other side of the rotation zone, and there is now a mini double top. We're doing double upon double upon double. So that's the only thing I'm watching. Other than that, it's still officially long from the percent B buy that was triggered back the day after Christmas, with definitely raising stops. But now the worst case is if it were to trigger the double below this key low of 97,784, that would be officially over in my book. Other than that, if we can take out the daily rotation zone, we still have the bigger double bottom in here that would trigger right at the 50 EMA. Euro, we still have a potential double top in the euro. Bitcoin, a whole bunch of nowhere still. Bitcoin, nothing to talk about because they've all shifted to the metals. Because that's the thing that's moving. Oh boy, spiders coming back real close at 50 on Wednesday, gapping up. Would technically be, if the spiders did close above Wednesday's highest, a percent beat buy. Also, keep watching about the 686.50 area though. That's a pretty key resistance area. We're at 685.50 right now for the gap up open. If it does roll over and we get a lot of weakness with that 10 a.m. price action potentiality, 681.92 would be the full gap fill. The Qs, same thing here. Above Wednesday's high would be a percent beat buy. Wednesday's high is 619.96. We're looking to open 619.90, 619.60. So pretty close to that, but that's the key level to watch for in there. If it did roll over, it would be to the gap fill 614.31. All right. Holy. FXI. Weekly short. FXI is a short for me, or at least a breakdown play, is got to get below this key support area. It's weakening. It's definitely weakening, but there's a major support level right here. That gets taken out, yeah. Then it's loss of support. That would also be the first cross the rotation zone on the weekly basis. And in the bigger picture, look where it would have failed. Between the 50 and 62.5. Okay? So this is a very key area it's trading close to now. It's already tested a couple weeks ago. But we start breaking down below that low, it's definitely looking like a pullback, bigger pullback there. LNG. Not technically, could be a nice little bounce play there. Not technically a percent beat buy. This is not the strongest bottoming pattern yet. I'm going to watch if this does continue to bounce, how it reacts around the 8 EMA and then rotates back down to form a stronger pattern. There was a potential percent beat buy a couple weeks ago that was never triggered. This is not a super strong pattern just yet. So this is one I'd be looking at next week. There's no official trigger today. But if it does continue to rally, unless we get a massive momentum bar, I'm looking closer for a move up than a rotation back down to form a stronger bottoming pattern. So maybe it's a weekly long for you, not yet for me. What was the percent beat? Where did that end? Let's see. That was 0.01 positive, so it is no percent beat buy based off of last week. At least the way I do things. Let's just take a look at that daily. And right now we just have a channeling pattern up. So it needs to have a stronger bottoming formation for myself. Chips are strong today, the Mag 7. So remember for NVIDIA, oops, there we go. Nothing on the pullback has invalidated that little double bottom pattern that was triggered back on the 23rd. Just a reminder, the first key target, 196.85. So we will see if that follows through. Yeah, I understand. That's why, you know what, just keep watching. It could be a real good play, but just keep watching. keep watching it for at least a confirmation on a longer term basis. What else? So that's your Nvidia trade. I wonder when Tesla's delivery numbers are coming out. I did not look that up. Tesla's pulled back to the prior breakout level and the weekly rotation zone. Need to see when the delivery numbers are coming out for there. I'm watching for a more significant topping pattern. So that's it on Tesla. Broadcom did not have any major bottoming pattern yet. We still have a gap left behind. So if we get some early January strength into still the AI trade, which seems to be petering out a lot more, but I would not be trying to call a top in it just yet unless we really. The closest thing I'm looking at is still Nvidia on the weekly basis. The weekly basis, if this double bottom we talked about plays out to the upside, the potential head and shoulders would be off the table. If it doesn't and we roll over from here, this neckline is very key. And then we can start watching for the bigger breakdown. Other than that, we got that double bottom in. That's really all I have. Let's just peek back at the S&P. Again, it's still going to be thinner markets today, so don't do silly. A lot of people are still in full-blown vacation mode, except for us. We're here. Going into the open in the S&P, keep an eye on the 69.25. We start breaking below there. You have a minor base at 69.20, but if that breaks 69.14, then 69.08. To the upside, I'm still needed to get above this 69.35 level and sustain above there to really get into anything but a scalp bull mode. With that, I hope everyone has a wonderful, wonderful Friday, second day of 2026. And I'll see you all next week. Thank you for tuning in. Bye for now.